What's up, guys? Welcome back to my personal finance channel. My name is Kyle DePepe, and today we are going to be talking about MARA, aka Marathon Patent Group. They're a Bitcoin mining company, and they were down 12%, I think over 12%, close to 15% at one point today, and I'm going to tell you why. If you guys are enjoying these videos, please give them a thumbs up. Subscribe to the channel would really help me. I would really appreciate it. And it helps others see this video in the future. But MARA, Marathon Patent Group, they were down today almost 3 points as of the end of the day. That's around 12%. And the reason is quite simple. They are doing a stock offering. That's right. So they are issuing, I want to say around 12.5 million shares at a price of $20 a share to raise $250 million. That's right, so they're raising $250 million, so why isn't this a good thing? Well, the problem is that they're pricing that offering at $20 per share. Also, it's diluting the shareholders. So, for example, if there were 10 shares outstanding of a company and I held one share, I would own 10% of that company. However, if that company decided to offer another 10 shares, well, now my 10% gets diluted down to 5% because my one share is now out of 20 instead of 10. So by offering 10 more shares to a company that has 10 shares, you're doubling the shares outstanding, but that means each share is now only worth 5% of the company instead of 10% of the company. Because of this, shareholder dilution and the offering happening at a price that is lower than the market price, what typically happens is you'll see the price of the stock trade down to, if not all the way to, the offering price. So obviously it didn't trade all the way down to $20 per share, which is good. It's honestly a pretty bullish sign, seeing as how this is a large offering. And when I say a large offering, I just means that I believe it's like a 17% increase in the total number of shares outstanding. So that's a pretty big dilution. Typically, you might see companies do like a single-digit percentage dilution of shares or shares being offered. So to offer 12.5 million shares, it's a pretty significant amount of the total number of shares outstanding already. Therefore, the dilution is roughly in line with how much it traded down. But the fact that it didn't go all the way down to $20 a share, which is where the offering is happening, is also pretty bullish. It means that people are buying up, they're absorbing that selling pressure, because anybody who was able to get allocation in this share offering, they can basically short the stock and lock in the price difference and have a completely, like market neutral arbitrage opportunity. So once those shares are issued to them, they can basically sell them, buy back, they're getting back the shares that they shorted, and they can lock in that profit. So the two big gists here are shareholder dilution and the pricing of the, issuance. Because, for example, if they priced this offering at, let's say, $24, $25, it probably wouldn't have traded down as much, even though there was still dilution happening to the current market cap, or the current shares outstanding, and what each share is worth on a percentage basis of the total company. Now, looking at this going forward, should you be selling Marathon stock because of this? Probably not, but I guess that's up to you to decide. My personal thoughts on this are, when a company has sees their share price go up so quickly in such a short amount of time, it's smart to take advantage of that, right? The market is saying we're valuing your company here, and for a company to then not take advantage of that type of situation is almost a disservice to its shareholders in my mind. I see them as, by doing this offering, they now have extra cash on hand for anything that might happen, right? Like say Bitcoin price tanks. They at least have some cash in order to meet power requirements or just daily operating expenses. Whereas if they didn't have this cash and the Bitcoin price tanked, it means they would have to sell more and more Bitcoin as they were mining it in order to pay for expenses. So having this extra cash on hand is definitely a good thing. It means that they can potentially hold more of the Bitcoin that they mine in 2021 and are able to sort of recognize that price appreciation that Bitcoin might have and use this cash to pay for expenses or payroll or whatever it is. Whereas if they didn't have this cash, they might be forced to sell some Bitcoin in order to cover certain expenses. So this is obviously bad in the sense that the shares were down, 12% today. They're doing the offering at $20 a share. They're diluting shareholders. But from a long-term business perspective, it makes sense. If your company has this crazy high valuation, even though you don't have that many Bitcoin currently, in your pocket, and you don't have all of these mining rigs delivered, you might as well take advantage of that current market valuation and get some more cash on your balance sheet. And that way going forward, you're in a better position for operating and using that cash as needed rather than having to scramble when Bitcoin price tanks or something, right? You want to be able to weather those ups and downs of the Bitcoin volatility. So I think that this might be a decent buying opportunity if you truly think that Bitcoin is going to go to a higher price going forward. And if you have full faith that Bitmain is going to deliver all of these mining rigs, they should be roughly mining, I think, well over like 10 to 15,000 Bitcoins per year, which is a very significant amount of Bitcoin. If they can do 10,000 Bitcoin a year and it goes to $100,000 per Bitcoin, well, their market cap is 1.5 billion, and that would equal $1 billion. Now, if they can mine 15,000 Bitcoin a year and the Bitcoin price is $100,000, that's their market cap right there. So because of these kinds of things, and because they now have this $250,000, which in and of itself is a significant portion of their current market cap, right? They're a $1.5 billion market cap company. So 250 million, 1/6 of their market cap was just raised in this offering, right? So that's pretty substantial right there. And based on that, I think they're probably in a good situation going forward. The last time they did one of these equity offerings in order to raise more capital, they used that money to buy more Bitcoin mining rigs. So they could do that same thing in theory with this. They could go out and buy another $50 million, $100 million worth of ASICs to mine Bitcoin and be producing even more Bitcoin going into the future and still have another, $200 or $150 million in cash. So there's obviously a lot of things that they can do with this. We'll see how that plays out going forward. But this to me is I guess, semi-bullish, especially if you believe in the price of Bitcoin, either staying where it is at the very least, if not going higher into the future, because it means that they can keep more of the Bitcoin that they mine and use this cash for just daily operating expenses and cover some of those things in the near term. That way they have more time for Bitcoin price to appreciate, and then as they're mining more and more Bitcoin over time, they can either hold on to it, or that means they can sell less of it in order to cover their expenses because the Bitcoin price has already appreciated. So I see this as a pretty bullish event in a sense, and a decent buying opportunity on this little dip. Bitcoin towards the end of the market today started going back. I think it was up over 36,000 as of recording this video. So we're only $5,000-$6,000 off of highs. So that's, anywhere from 15 to 20% away from trading at highs. So we've seen this big pullback, over 25% pullback in Bitcoin. It's definitely held. There's been buyers. We're slowly trickling back up to that $40,000 level. So if these things can all hold, and now that Marathon has $250 million in cash, it all seems like pretty bullish stuff to me. So I'm pretty excited for the future. I'm pretty bullish on Bitcoin, if you can't tell. And I guess we'll see how this plays out. But either way, that's why they were down today around 12%. The main two things are the offering was priced at $20 a share, and they were trading above that. So typically they trade down to at, if not near, the offering price. And it was a fairly large amount of shares coming into the market. So about a 15 to 17% dilution in total shares outstanding. So shareholder dilution and pricing of that offering. However, on the other side of things, they now have $250 million in cash to pay for expenses, to buy more Bitcoin mining rigs or whatever. So overall, I'm not super worried about this. However, if you have any bearish thoughts on Bitcoin or their potential operations, or being able to get mining rigs up and running in a sufficient amount of time, there's reason to be skeptical. Obviously, their stock has gone up extremely fast, extremely quickly, so just be careful buying in close to all-time highs. It's always a worry. That's why a lot of times I like to use options. I can pay a little bit less and still have the same upside leverage or exposure as if I was buying the stock outright, but it allows me to risk a little bit less capital. But either way, I'm not going to get into that today, so hope you guys enjoyed this video. If you did, please give it a thumbs up, subscribe to the channel, it would really help me out, would really appreciate it. Until next time, guys, thanks for watching.